global growth is recovering from the recent shocks, both the pandemic and the invasion of Ukraine, and of course, so we're expecting it to moderate this year and then increase slightly next year in our most recent outlook. Obviously, both inflation itself and also the tightening of monetary policy are weighing on growth and holding it down slightly this year and next.
Let's talk a bit about the consumer, because the consumer is kind of squeezed by both effects, the inflation and also the higher rates. So what's your outlook for consumption spending?
Yeah, so, I mean, inflation is incredibly painful for consumers. It's worth, remembering that, as you say, consumers are very squeezed and increasingly squeezed in terms of their household budgets now. And in particular, it's very painful for people on lower incomes who have less opportunity to avoid inflation. So we're expecting consumption to moderate a bit, but to continue through this year and next.
Well, that's quite positive, though, despite the higher interest rates. What's your view on the real estate sector? I know it's a bit of a tour d'horizon, which we're doing here, but still the real estate sector seems to feel the pain quite substantially.
Yeah, well, one of the ways in which monetary policy tightening works is through transmitting through interest rates, and we're seeing impacts on the housing market and the real estate sector, and some of that we've seen earlier on, and actually now you're seeing house price falls as well across different economies. That is part of monetary policy tightening feeding through the system, and is one of the difficult but necessary parts of that transmission mechanism.
Yeah, it won't go without pain, I guess, the bringing down inflation. The ECB seems to be still quite optimistic that they can sort of have a soft landing in the euro area. Do you think that's fair? Do you think that's right?
Yes, we have a similar approach in our projections. We're also expecting inflation to moderate this year and then fall this year and next year, without seeing a very sharp rise in unemployment. Indeed, unemployment remains quite high through our unemployment remains quite low through our forecast, and that is one of the very good things that we've seen. One of the aspects of resilience in the economy that is very welcome. So this could have proved more painful. So we're also anticipating unemployment to remain relatively low despite the tightening financial conditions that we're seeing.
Yeah, and economic activity, also given that we are still, I mean, at least not in all euro area countries, but in several, are faced with very high energy prices. Do you think that's something which might dampen economic growth?
Yeah, I mean, the energy price is obviously having an impact on economic growth. It's feeding through into those inflation numbers. It is the reason why we saw headline inflation go up and is now falling, but it's also feeding through into core inflation. And so that is affecting economies across the board, consumers and businesses, and that will continue to dampen growth. Of course, energy prices are now falling, and so that effect will fall out of people's experience. That said, of course, some people have purchased, in advance energy.